In case you haven't noticed, global financial markets right now are volatile as hell, and it's down to the unhinged individual who currently occupies the White House. So, if you had $1,000 right now, how would you invest it in 2025? Here's what I would do. Before I get started, why should you listen to me? Well, I'm Tim from Tim Talks Money, and I've been working in asset management and private wealth for nearly 15 years. So if you want a more holistic understanding of investing, then give me a follow. Okay, first off, let's establish some ground rules. I assume that you've got at least 20 years to go until you retire, so we want to take on a little bit more risk when we allocate our assets. Okay, so first up, I'd allocate 70% or $700 to the Vanguard FTSE All World UCITS ETF. Remember, this is listed in London under the ticker VWRA. And what this gives you is basically global exposure to stocks in both developed markets and emerging markets. The ETF has an annual total expense ratio of 0.22%, and you get exposure to over 3,600 stocks globally. Compare that to something like the S&P 500, where you only get exposure to 500 stocks and just in the US. Okay, next up, I'd allocate 18% or $180 to the Spider Straits Times Index ETF. Now, this gives you exposure to the 30 largest listed companies in Singapore, and you can buy this ETF on the local Singapore exchange under the ticker ES3. And while the Straits Times Index ETF does have a relatively higher annual expense ratio of 0.28%, it does have a very attractive dividend yield of 4.5%. And if you're just starting out investing and you're getting comfortable with investing into markets, then I think this is a great option as it gives you exposure to the big banks in Singapore. Let's get a bit more defensive. To add a little bit of ballast to the portfolio, I put 10% or $100 into gold. The easiest way to get exposure to gold in Singapore is through an ETF, and you can actually get it through the Spider Gold Shares Trust. Now, this has a ticker under the Singapore dollar listed shares of GSD. Why do I like gold? Well, gold does well in times of uncertainty, but beyond that, gold also has an unbelievable track record of delivering positive returns during recessions, a time when stocks typically crash. So as a defensive asset, nothing beats gold. And finally, to add a bit of spice to the portfolio, I put 2% or $20 into Bitcoin. The easiest way to get exposure to this, through an ETF, and the biggest one out there is the iShares Bitcoin Trust ETF, listed on the NASDAQ under the ticker IBIT. So there you go, how I'd invest $1,000 in Singapore in 2025. I'm keeping it relatively simple by allocating to 4 separate buckets. How would you invest $1,000 today? Shoot your thoughts in the comments and give me a follow for more investing insights and money tips.